That was a very comprehensive answer, Kim. Yeah, it is helpful to get like a glimpse into what kind of analysis that you would do to help people decide how much insurance they need.
And how important is it, right? Like making sure that people's families are okay. What if you're an insurance advisor and you didn't spend the time to figure things out, and your spouse passed away and there wasn't enough money? How horrible. How horrible.
Episode 15 of Access to Justice. I'm your host, Evan Clark from Kahane Law, and my co-host is here, the wonderful Ms. Heather Malarick of Merrick Law. Heather, how are you?
I'm well, Evan, thanks. It's about 30 degrees outside, and I think it's about 52 degrees in my office, so I'm feeling a little warm and a little shiny, maybe a little silly. So we'll see how today's episode turns out. How are you doing?
Yeah, I'm good too. My office is in the bottom floor of a condominium, right? So it's like the bottom floor is all like various offices of this condo, and above is all people's residences.
Uh-huh.
And the controls for the air conditioning for the entire bottom floor are in my office. And that was the case last year. They just changed it because there's like a denture's office that's all south facing.
Oh.
So you would always be like dying and need the air conditioner cranked.
Right.
And I would be freezing.
Mm.
So because of that, I closed like the air conditioning vent in this office.
Right.
But now he has his own unit now in his office.
Mm.
So now I'm too hot in my office, and I have to like get a stepladder to open the air conditioning vent. So yeah, that's the joys of summertime.
Yeah, you'll get that fixed just in time for it to be cold again, I suspect. So
right.
No, yeah.
And of course, we're joined today by our very special guest, Kim MacDonald of MacDonald Advisory. Kim, as you may know, is a financial advisor and insurance advisor with Raymond James Limited. Kim, welcome.
Thank you for having me, Evan and Heather.
And this is a very special episode. It's a very special Kim episode. We don't have another guest, only our special guest, and we're going to learn about some things today from Kim. So we're a Canadian podcast with a mission to educate Canadians about the law. We interview experts in law, mental health, and finance, focusing especially on topics that create the greatest barriers to entry into the justice system.
Yeah.
You can find us on YouTube, on our A2J podcast channel, and online at a2jpodcast.com. So, Kim, what are we going to learn about today?
Today is a very special day. We're learning about the basics of insurance, and we'll try and make some applications for people who are divorcing, like trying to figure out how you combine separation divorce with different issues in and around insurance. So yes, lots to talk about today. We're going to be taking it back to the basics. So I think our viewers will probably be all ears, because it can sometimes be confusing and difficult to find information on this topic.
Yeah. Insurance is I mean, yes, there's application in family law, but it's so broad and such an important part of our lives and the structure of our society economically.
Uh-huh.
For that reason, I took insurance law it's one of the classes that I made sure I took, because I'm like, well, I buy insurance. I sure would like to know how this works.
Right.
And that didn't focus so much on life insurance per se. It was more like, car and all the insurance. But it's because it's so important. That's why I wanted to learn about it. Now, I just wanted to let people know what's going on here, because if you're watching this, you saw me like leaning over to like read our intro. That's because I have this thing.
It looks like a garbage can. I'm just going to describe it for those of us that can't, or those of you that can't see, like a mesh, maybe like a robotic torso of some kind. What is it, Evan? What are you showing us?
Well, as you've been able to hear, and probably can still hear because it's not working great, is my office is all hard surfaces, and it has like a vaulted ceiling. It's like a 15-foot ceiling, which is why I need a stepladder to open and close my air condition vent. It's way up there. And so I'm so echoey. And when I'm editing these videos, it bugs me. And so I was like, I need to do something. So I thought I'd try this thing out, and I was like, oh yeah, it'll just make it perfect. But I don't think it's doing the job, so I'm probably gonna take it back. But just thought I'd let people know, a little glimpse behind the curtain here.
Tapestries. I mean, curtains brings to mind tapestries. That's what they use in like middle-aged castles or something. So maybe you need to go like medieval on your sound issues.
Yeah, I actually prefer. I like you call them middle-aged castles. I'm kind of a middle-aged castle.
Is that not the right thing? I told you I'm silly. Things could come out of my mouth today. I apologize in advance.
No, that would be great though. Tapestries would be epic, but you know a tapestry maker, Heather.
Oh, I'll keep my ears open.
Okay. All right. That's enough of that, I guess. Kim.
Okay, Kim.
Insurance. What is the deal?
Where do we begin? Well, I think there's a natural place to start, and it feeds into a little bit of what you were saying before on how you were learning about insurance, and the type of insurance you were learning about wasn't maybe life insurance, it was another type. So it might be important for people to know that there's two types of insurance people. There are exams that professionals write to become licensed to sell life insurance and critical illness, disability, travel insurance, those types of things. And there's a whole separate licensing and different type of professional who sells home and auto insurance and those general liability insurances for businesses. So there's two of us, and sometimes people will reach out to me looking for liability insurance on their business, or they want home and auto insurance, and I have to send them off to a different type of insurance professional because that's a huge topic in and of itself. It would be very difficult to specialize in both. I'm sure there's somebody out there who does it, but you'd have to be a pretty smart cookie to tackle both those topics. So in the investment world, wealth planning world, typically you'll find life insurance people and accident and sickness insurance people. So we're covering off the personal side of things, so to speak. So that's important. So look for licensing before you call somebody so you know what they're actually able to provide in terms of solutions.
Yeah. The little insurance broker logo of like the purple person hugging themselves.
Oh, yeah, they're sort of, yeah. Mm-hmm.
That's usually, correct me if I'm wrong, Kim, but that's like the type of insurance that you don't sell. That's like, those are the people that are selling car insurance and content insurance and stuff.
Yes, I believe you're correct.
Whereas you're doing more of like the financial planning type of insurance, or insurance that can be used or as part of a financial plan.
Yep, you betcha.
Okay.
Yep.
Yeah, to be clear, Mike, the insurance law class covered all the insurance, all of it. But from the legal perspective, I was already familiar a little bit with it, but yeah, I learned stuff about how if you lie on the questionnaire, then you're not covered.
Right. Yeah.
And
Yes.
you can get a return of your premiums, and that's about it.
Mm-hmm.
Yeah,
Anyways.
that happens a lot in the banking world. So there are people who take out insurance on their debts. So mortgage insurance you see at the bank, and most of those people are not insurance licensed. So there has been cases in the past where insurance is sold and questions are answered, maybe not giving up all the information because a non-insurance person is selling the insurance, so they maybe aren't up to speed on how important it is to get that right. And then what happens is bank insurance is generally not put in place until you make the claim. So you don't find out that you did it wrong until you're actually placing that claim. And it can be a pretty sad state for a family. So yeah, I think in my view, it's pretty important to have a licensed insurance person going through those questions with you to make sure that you get that part right and your insurance is actually put in place and approved.
Okay, so you just blew my mind with that information. So those bank sort of policies are not in place, like they're not reviewed and confirmed until a claim is made?
Yeah, that's correct. So they're cheaper and easy to put in place, and there's just generally a few questions. But if there's anything you don't add to those questions, and the insurance company goes back to look at the questions and they find out upon review that you answered something incorrectly, then that insurance is not approved. It's not put in place. A claim will not go through. There was a W-5. You can find it on the internet. You search YouTube. A W-5 several years ago did a couple case studies on insurance sold through the banks, and it's it can work and it does pay out if you do it right, but there can be some pretty significant issues if there are some mistakes made along the way.
Right. Something to be cautious about or know about. Is that the underwriting process?
That's correct. Yeah.
Okay.
Yeah. So nobody's looking at the answers to the questions, going back to the person applying for insurance and saying, can I get some clarification on this? Are you sure about this? Or you never went to this appointment. Why was that? That just doesn't happen. And that's a really important part of the whole insurance process.
Sorry, I feel like I'm leading us down to like a rabbit hole here, but I appreciate that, like, some people might be buying that kind of insurance on year one of their mortgage, but not making a claim until year 15. So how do they like square that? Because lots of stuff could happen health-wise in those intervening years. So do they try and look back retrospectively at when that person answered those questions?
So,
or do you even know? That might not be a fair question, Kim.
Yeah, my understanding is that the bank doesn't review these questions when they're answered originally, because there's no insurance person who's made a commission and is required to service these clients. So, because the bank reps who sell the insurance, they get compensated a different way than a typical insurance advisor. So my understanding is that when people fill it out, they had better answer the questions fully, completely, and absolutely correctly. Otherwise, there's probably not going to be somebody poking them down the road saying, hey, let's review those questions. Did you answer them properly? And talk about that. So yeah, very important.
So I feel like you have maybe some alternatives to suggest to that type of insurance. Is there something else that that people can look at? Or
I think many people gravitate towards working with a licensed insurance advisor for a few reasons. If we drop back to the bank insurance, that can be a tough pill to swallow because you're paying the same amount monthly on your insurance. But remember, you're paying off your debt as time goes on.
Yeah.
So you're paying the same premium for a coverage amount that's actually going down, which is also, it's not an ideal situation if you could get something better elsewhere. So many people are unattracted to that type of insurance because there's some logical flaws to the whole thing. I mean, it's easy to put in place at the time, right? You're getting your mortgage. You're asked, do you want insurance on this? Of course you do. You want to protect your family. You put it in place. It's really easy to do. But if you look a little bit under the hood, you might find that there's a better product elsewhere, and it might even be cheaper when you consult a licensed insurance advisor, because there is sometimes less risk for an insurance carrier. If they have a trained professional selling the insurance, they're more likely to get it right and get the risks right versus the banker who might not know what's going on. So that might present with more risks down the road. So I think many people will gravitate towards an insurance advisor who's licensed license through their province and look and shop the market and see what's the best insurance carrier for them, who's offering the right product at the right price, because there's different products at every company, and everybody's giving you something different. So yeah, I would imagine most people gravitate towards working with a licensed insurance advisor for those reasons.
Yeah, like a throwback to episode 7 with Krista Lindstrom.
Yeah.
We first broached that, and of course she shared a nightmare of an experience where she sold that bank life insurance policy on this mortgage, and then the husband died and the widow was left without any insurance benefit. And that is what inspired her to become a licensed life insurance salesperson. And so Kim, I think my guess is that, and I'd like you to confirm or deny, my guess is that part of the reason in difference in price and why it might be cheaper sometimes is those insurance policies that are linked to a mortgage or a loan or credit card. There's like there's like 2 or 3 questions. I
think there's about 5 or 6. Okay. The last time I looked anyway.
Yeah, sure. There's not very many questions. When I got life insurance, even for a term policy, there was a lot of questions.
Oh, pages. Yeah.
And I had to go to a doctor and everything. And so they have a really good idea of what my health is like, and they do their risk assessment accordingly, so that then maybe I can pay lower insurance because I'm not high risk, I'm not a smoker, for example, although I think that's one of the 5 questions anyways. But yeah, they do a deeper investigation, which might not always be cheaper, but certainly if you have good health, it might be cheaper. Am I on the right track?
Yeah, I think so. Yeah. So the more information an insurance company has on you, the better assessment they're going to make. They're going to get the risk right. That's really, really important to their overall business. That's all they're in the business for, is managing risk. They want to make sure, because remember, there's people out there who buy stock in these insurance companies. They wouldn't buy stock in an insurance company if they just issued policies to everybody out there. So making sure that we find the right people is important, so we know what our actual risk is and we have enough money to fund that particular risk. So I know, like, I've heard many people in my travels complain about insurance companies and the stupid underwriters don't know anything and all this kind of stuff, but they really have an important task of making sure that they understand the risk that they're taking on and that they're bringing in enough money to cover that particular risk. Because all we're doing when we're buying insurance is we're transferring that risk to a business. So they're not going to take it on unless they get something out of it too. It goes both ways. So yeah, I think you have to get those questions right. I mean, there's pages and pages of questions. We're going to find out everything about you and your health history and your parents and brothers and sisters. If they have serious things, we're going to know all about this, because that's going to help the underwriters make a fair assessment of what you should pay for your insurance and whether they should extend this insurance to you at all. Smokers require, they need to pay, twice the price of a non-smoker. You get dinged for health issues. And that's why we always say to people, get insurance when you're young, before these issues pop up. Insurance is very, very affordable for people when they scoop it up in their 20s and 30s. So get this in place, even if you don't think you need it, because it can be very, very difficult to get policies put in place if you get health problems, or you might be able to get a policy, but you can't afford it. And that's really heartbreaking for families looking to protect their loved ones.
Right. So just so that it's kind of said explicitly, the price of insurance is going to be tied to the risk that they're taking, which is measured by sort of the level of your health problems, whether it's good or bad, and whether that predicts whether you'll basically pass away young and they'll have to pay out or not. Is that right?
Yeah, exactly. And age is a factor too. I mean, the older you get, the more likely you are to have health issues or pass away. So there's a number of factors that insurance companies look at when they're looking to extend insurance, but health is really the major one. Yeah.
Right. And the price is also related to the amount of coverage, I imagine, that you want.
Yeah, exactly. And I think a lot of people have fear when it comes to looking for insurance because what they have in their mind is they're going to meet with a salesperson, right? So they need insurance, they're going to meet with a salesperson, and this person wants to sell them insurance. That's how they make their living. So insurance advisors have very little recurring revenue annually. They, for the most part, have to find clients every single year to earn income. So they're in a hunter-gatherer mode. They're looking for clients, people to sell insurance to. So people worry about that in terms of what is the overarching motivations of this salesperson. Are they going to sell me the right amount? Am I going to get too much? What if it's expensive and I can't afford it? How do I tell them that's embarrassing? What do I do about this? So I think it's really important to find an insurance person that is caring about your situation. They will talk to you about issues. If you have a health concern that you're worried about, that's perfectly okay to bring up to your insurance person because they can go to the underwriters, the person who's going to look at your application and see where your risk is. They can go to them ahead of that application being processed just to see where things might shake out. So it doesn't need to be such a scary process, but it really is important to find, if you're looking for a friendly salesperson, find your friendly salesperson. If you want a hardcore insurance guy who's going to put a big deal in place, well, find that person. Really just, make sure you find the right professional because we do learn a lot about your health history and your finances and all this kind of stuff. So if there's things that you're worried about bringing up, it really is important to find somebody that you trust.
So they're selling a product, but they're also there to help you through the process, it sounds like, and to help you, I guess, negotiate or talk about those things that might come up through the underwriting process. Is that right?
Yeah. And there's the beginning of the insurance, and then there's also the end of the insurance that people don't think about. Okay. So you put the insurance in place, the beginning, and maybe you put insurance in place for 20 years, 30 years, forever. Eventually, a claim might have to be placed. You're sad, you're devastated, you're grieving, you don't know what to do. When you pick up the phone to call your insurance advisor, you want somebody who's going to care about your situation. So it is also important to think about that scenario because maybe you're putting it in place, but your spouse is going to have to make that claim. Will they feel comfortable dealing with this person down the road? That's something that people don't really think about, but I can tell you, I end up bringing over lots of insurance policies that other advisors have sold, but they come to me later on and I become the new advisor because they say, well, I don't know that person. They never called me. My spouse wouldn't feel comfortable contacting them if something happened to me. It's a really tough process when people pass away. So there are those two sides of the coin. Like find a good insurance advisor. They're everywhere. There's tons of them. Tons of good people.
I have a couple rabbit holes that I would like you to guide us through, Kim. Your choice. One is how insurance products can be used to help legally avoid paying taxes.
Evan, weren't we supposed to keep this at the basics today?
Your choice. That's why I said your choice. Maybe that's not a rabbit hole we choose to go down today, and that's okay. It's definitely one of the most, in my opinion, most exciting and powerful aspects of insurance in a financial plan because, the Canadian government loves our money and it wants it all the time. And so any way you can avoid giving it to the government legally, I'm interested in learning more about. So we don't have to go down that rabbit hole. The other one is there's so many different insurance products, and they're not all suitable for everyone. It depends on their plan and everything like that, their finances and everything like that. But so what I would love to learn about is a little bit about life insurance, like term insurance versus insurance that doesn't expire, that you can have forever until you die. Like you said, it might be 30 years, it might be forever. Talk a little bit about those differences.
Great questions. So in Canada, I don't know of any life insurance that isn't tax exempt. There might be, I've read about it in textbooks that there is a chance that an insurance policy could have some sort of taxable consequences to it when you have the claim. But for the most part, pretty much all life insurance is tax exempt in Canada. So what that means is you're buying insurance today, you give the insurance person or you work with them to figure out what you actually need. And by the way, there is a document that all insurance people need to complete. It's called the reason why letter. And the reason why letter has the insurance person typing out why they're recommending this particular insurance. What are your needs? What is the amount? How do they justify this insurance? So that helps a little bit in terms of the trust relationship. So you understand why this insurance is actually being sold. You're not just trusting somebody to put an amount in place for you. So it's not just a salesman selling a whole pile of insurance to you so they can earn commission and feed their kids. There's an actual reason behind this. So the insurance person will complete this reason why letter and put it all in place and make sure that you are getting the right amount. So let's say you need $1 million of insurance that's going to cover 20 years. Well, if somebody passes away before that 20 years is up, they get every dollar. Everything. The government, to Evan's point, is not keeping any of that money. It's tax exempt. It's paid out to you without any taxes. So that's great. It's very reliable money and it generally gets paid out fairly quickly. So that can really help out people who are tight on cash. They just don't have any extra savings or checkings, money in their checkings account. They get this money pretty quickly and they get the whole kit and caboodle. So that's great. There's other benefits to this tax exempt thing, and we can get into that later. So Evan was talking a little bit about insurance suitability. Like what are we buying and why are we actually buying it? So we have a couple scenarios in life that are going to, they're going to play out. Death is going to play out. We cannot stop death. That is going to happen. Yeah. So we know.
I disagree.
We know that.
Evan's going to be the first, immortal.
Just kidding. Carry on, Kim.
You're going to die. Sorry, everybody. It's just a fact of life. Now, whether we become disabled or ill is another thing, but that's another risk that we could have in our lifetime. What happens if we get sick? Or what happens if we lose an arm or a leg? Can we still do our job? So we are really just ensuring against these things from happening, right? What if we die? Do we want money to go to anybody on our death? What if we become disabled? Do we need to support ourselves, other people? What does that look like? If we get sick, nobody thinks they're going to get sick, but you guys have seen GoFundMe pages on the internet. They're absolutely everywhere. Well, that's usually an insurable situation. Every insurance person out there who sees these GoFundMe pages thinks to themselves, we keep it on the inside. We don't say it out loud, especially at that time because it's sensitive, but we just think, why didn't you put critical illness insurance in place for you and your family so you didn't have to have your face next to that money meter? That could be embarrassing for a family. So there are ways to insure these surprises and these usually unwelcome surprises. So if we are going to pass away, we buy life insurance. So that means money is going to pay out to whoever we want money to go to. It could be your family member. It could be your friend. It could be the bus driver who drove you to work for 30 years. You can give money to the charities that you support. So people will put life insurance in place because there is a need for money to be there when they are gone. So you guys probably bump up against that all the time when you are gathering financial disclosure for your family law cases. Then we have disability insurance, which is sort of an interesting one. There's a lot of people who have disability coverage through their work plans, and they'll have not always, especially with small companies, they won't always have disability in place, but it is, it's something that you see fairly frequently, but nobody knows what they actually have. So you'll sign up with a company, they'll say, we have a great package. People will look up what they get for massage and dental usually. And then that's sort of, about, the full of it. But what's really important is to actually look at that disability amount, because that's ensuring your income. You went to school, you worked your whole life for this paycheck. This is literally one of the most important pieces of information you can look up in your life. What is my company going to pay me if I can't work anymore? Right. And usually it's 67% of your income, something along those lines. Some companies will pay it out to you and it's taxed, so you don't get the full amount. You get taxed on it and then you get your amount. Other companies will pay it out to you without any taxes because it was taken off your paycheck. You already paid the tax on that money. So when you're looking at your group benefits booklet from your work, you want to look to see how much you're going to get and if it's taxable or not. And then you'll know how much money is going to go into your checkings account at the end of every month or every 2 weeks or whatever it is, if something goes wrong. And that is so, so important. You guys probably see that for spousal support. So if we have a situation where there's income that one spouse is relying on, how much disability money is going to be put in place to keep those spousal support payments going, or those child support payments going? What if there is no disability in place? What then? So it is like a super important topic. And I can tell you, I have never, ever in my life had a client when I've asked them what they have for disability that they say, oh, I know, I get $4,000 a month, or I get, 67% of my income, Kim, and it's X, Y, and Z. Like nobody knows that. So it is important to do that, 20 minutes of work to figure out, will I be okay if I can't work anymore?
Right.
So I have a question about that, Kim.
Yeah.
I just pictured this happening, that what if somebody has disability insurance through work or whatever, and then they go and talk to their financial planner or advisor who then helps them buy some better disability insurance. Is it common that there would be a conflict there where one insurance will say, well, we're not paying because you had this other insurance in place? I know that's common with health insurance policies. I have great firsthand experiences to talk about that. But is that also the case with disability?
Yeah, normally what people will do is if they already have some type of disability in place through their work and it's just not enough, they'll layer on a little bit more. And it is important to have a good conversation with your advisor about that and coordinating those benefits, because yes, that people can bump up against that. They'll think they're getting a certain amount, but the insurance company wasn't aware that they had other benefits elsewhere and they're just not going to pay out. So every policy, every insurance carrier has different terms and conditions for the insurance that they're issuing. There's different definitions of disability insurance. So there's cheaper insurance, disability for less coverage, or if you have a sort of a high-level office job, you're going to probably purchase a different kind of insurance than if you're a trade worker and you have a lot more liabilities in your day-to-day work. So, yeah, there's different definitions out there. There's different policies. Coordinating those two benefits is majorly important, Evan, and I think people need to start a job and ask for the benefits booklet right off the bat. And if they don't understand it, go back to payroll, go back to HR, ask some questions. And if you still don't understand, take it to any insurance advisor out there. They're going to tell you what you have right off the bat and what you might be able to coordinate with that particular insurance.
Yeah, I ran into that problem because my employers, while I was in Kuwait, wanted to, keep me on benefits, like because it would be a good thing. Meanwhile, my coverage through the forces was better, but also was the wussiest of the two, because both of them had the, if you're covered by other insurance, we don't cover. Yeah, so it's just something to be aware of, that can happen where you may think you have coverage. And we tried to claim, my family, we tried to have a claim under that public health services plan and thought we were covered. And after months of bashing our heads against the wall with the administrators, who are bureaucrats in Ottawa, it's like not even proper insurance, okay? It's the government. Was a very frustrating experience. So luckily it was just health insurance stuff and not a huge deal. Could you imagine if it's disability and you think that you've got enough insurance, and then it turns out you've got half of what you thought or something like that?
Mm-hmm.
Yeah, there's a lot of sad cases out there for people not really understanding what it is that they have. So, for example, something goes wrong with them and they think that they will continue to get their disability paycheck for their whole life. But the insurance company, the terms on their booklet says, oh no, we're actually only going to cover you for 24 months. And then you have to go back and do any job out there. So yeah, we know you want to go back and do the job you were doing before, but if you can be qualified to do a job that's similar in certain aspects, then we're going to cut you off completely. You have to go do this other job, even though you might hate it. It might, give you, back pain or whatever.
Mm-hmm.
If you can do it, you're going to be doing that and you're not going to get disability anymore. So understanding those definitions, working with an insurance person who really understands disability insurance is so, so important. But yeah, get to know your group benefits booklet. There's sometimes you made a point about how they wanted to keep you on the insurance plan. Most insurance carriers, so the big carriers who offer these group benefits booklets or these group benefits plans to companies, they usually require 3 people. So there's a couple that offer these plans for 2 people, but they usually require 3 people to be on these plans to keep them going. So if you had a 3-person plan and 1 person was dropping off, then their policy might not work anymore. So that could be a reason that they might want to keep you on. I don't know.
They wanted to keep me on because they thought they were helping me out. The funny thing is, both policies were administered by Sun Life. So that's how they figured, like, no, you don't, because you've got this other Sun Life policy in place. It's very frustrating. So I don't want other people to have that experience. Make sure that if you're paying for insurance, that there's no conflict.
Yes. Yeah. And I would say that the majority of insurance advisors out there would request your benefits booklet if you're seeking out individual insurance, because they want to see what you have over here and they need to include it as part of their needs analysis, right? So if they're doing their due diligence and they're doing their job, they would see what you have over here, what you could coordinate with those plans. They would talk to you about the different types of disability and the costs and how long you would stretch out this plan. So some disability insurance pays out 2 years, some 5 years, some up to age 65. So making sure you get the right terms in place with the right conditions. Like there's some academics out there who've spent their whole lives, studying and working to become an ophthalmologist, right? And then they do a few years of ophthalmology, let's say, and they become unable to do their job anymore. Well, they don't want to retire. They could go be a professor somewhere. What if they bought the wrong insurance that forces them to stay off work? That would be horrible. They would want the insurance option to potentially continue to work in another capacity and still get their disability checks. So everybody's coming at disability from different angles and making sure you really nail down all those terms and conditions. And it can take a long time to work with a professional to wrap your head around this disability. What do you need? What are the extra bells and whistles that you might want on there? And put what you actually need in place, and maybe make cuts in your life in costs in other areas to put this really, really important paycheck in place. because it really is one of the most important things Canadians can really think about in their whole lives, making sure we have disability coverage. And then there's critical illness. So critical illness is super interesting. It came up by way of a doctor. So it was not the insurance companies that created the product. A doctor saw everybody's getting sick, diabetes, stroke, heart attack, you name it, all like Parkinson's, like MS, everybody's getting sick. Why is there no insurance that can cover this particular type of cover? How do I say this properly? Why can't we not get a chunk of money to help us when we get sick? Because it might take 120 days for your disability money to kick in. What do you do if you can't work and you're waiting months and months for your disability check? Well, your debts are rising. Now, remember, your disability check's only going to typically give you enough money to keep your typical expenses going. It's not going to help you pay off the debt that you're incurring while you're waiting for it. So critical illness oftentimes is a really great type of policy to put in place because it will cover you for the months you're waiting for disability kick in. You can use it for medical costs. You can use it for anything you want. The insurance company is not going to ask you for receipts. If you go into the doctor and you have a qualifying illness and you live for 30 days from the diagnosis of your qualifying illness, this lump sum of money is going to get paid to you, no questions asked, no taxes on that money, and it's going to cover that GoFundMe need that people tend to have. So you can buy it on your kids. If they get sick, you can get a lump sum of money. You can buy it on your spouse, on yourself. Even if it's $20,000 or $100,000, whatever, put something in place because the likeliness of getting ill is extremely high and people are struggling with money. So especially people who don't have a spouse to rely on, single people. Well, what do you do if you don't have enough money? Who do you ask? Mom and dad or friends? Maybe that's not what you want. Maybe you're independent and you want to cover off your liabilities on your own. You put critical illness in place, and if you get sick, you get your money and you can get treatments in the US. You can go to Disneyland with your family if you have a terminal cancer, right? Like you just can take away a lot of those worries. So it's a really fascinating type of insurance. A doctor pushed it forward. It went through. It's in place. Canada has kind of a cool little feature in our country where you can pay your premiums into this policy. And if you don't make a claim, you can get those premiums back, like a forced savings account. We call it return of premium. Not everybody's into it because you have to pay quite a bit more monthly to get that option. But if you're just, if you don't think you're going to get sick, but you want to be responsible for your family, that's a great idea, right? It's going to be, put in place. If someone gets sick, some money's there. And then if you don't get ill, you get that money back after a certain number of years, depending on what that insurance company is selling.
Right.
I heard some stat somewhere, Kim, that 1 in 5 people over the age of 65 get one of the big critical illnesses like stroke, diabetes, Alzheimer's, Parkinson's. I don't know what they all are. But does that sound, is that fear-mongering or is that accurate?
No, the stats are extremely high on everything. I remember once I was putting together a paper for some clients and, or like kind of like a marketing type of piece because nobody knows what critical illness is. And I remember looking up the stats on diabetes and heart and stroke and MS, Parkinson's, all of these issues. And I was absolutely floored, Evan, at the likelihood of us getting one of these problems. And it was like, eventually we were all going to get something. When I looked at usually insurance companies have covered 25 illnesses. And I was looking at these, I was like, everybody should have this. Like, we're all going to get one of these things. We may as well get this type of insurance and make sure that we are responsible for our families. So yeah, it's jarring.
So the way that you describe that brings me to another question, which I'm going to hold for a second because I saw Heather ready to ask a question.
I was just going to ask if critical illness is underwritten the same way life insurance is. So do folks have to go through that health that whole health process that we talked about before with all the forms and the questions and the visits to the doctor.
Yes.
It is.
Yeah, it is. It's like, yeah, it's tough. It can be sometimes tough to get critical illness policies put in place as you get older because of health issues, and it's covering your health, right? So yeah, underwriters are extremely careful when issuing disability critical illness policies. So you can pop these things in place. There's different terms that you can buy. So you can buy a 10-year term of critical illness and have the option baked in to continue to roll it over if you decide that you want more. Now, of course, it costs more, but at least there's an option there for you to keep it going if you do get sick. Many people buy critical illness to cover them up to age 75. That's a very common policy that people buy because there's a pretty high likelihood that we're all going to get something by the time we reach
by that age. Yeah, sure.
Yeah, so you look at what you're paying into it and how much money you might need to cover a problem. And I think, there are some group benefits out there that actually have critical illness in their policies. It's not as common. It is important, and usually what you'll find is about 25,000, 20,000 just tucked into your group benefits. And honestly, like, who doesn't want that in place as a just in case, right?
Sure.
Like, I don't know what you guys have noticed on GoFundMe pages, but usually it's between 20,000 and 50,000 is usually what I see for common numbers. And if you pop this insurance in place when you're younger, it's not that expensive, and it's just a whole pile of peace of mind.
Yeah. Yeah. And it's that thing too of like, it's not just the person that gets sick and their income is lost, but if you have a family member then taking care of you, so they're missing work, or maybe they're losing their job because your illness is time consuming and puts pressure on the family, that kind of thing can be so helpful at that time of crisis or illness or whatever.
And like, what is a leading cause of divorce?
Financial pressure, right? Yeah.
Is it? I don't know. I heard that.
I think it's one of them anyway.
One of them. It's a biggie.
People hating each other. Okay, I have some philosophical questions and I have a practical question. I'm going to start with the practical one because I feel like it's a probably shorter answer. So when you think about health insurance or even like term life insurance, there's no like end date. You just keep paying, and then when you need it, you make a claim, and that's that. For disability and or critical illness, do either of those types of policies commonly have like you're all paid up, now you're covered with this insurance for the rest of your life? End date?
Okay, so a couple things. So I forgot to answer your question about term versus forever insurance on life insurance. So I'll dip into that, and then we'll kind of work at that paid up type of insurance where you can pay it all up early and then just have it in place. So life insurance comes in two different formats. So we have the cheaper type of life insurance and the more expensive type of life insurance. And I say that in jest a little bit because if you look at how insurance companies price out the cheaper insurance versus the more expensive insurance, they do it in a really intelligent way. It actually isn't more expensive technically to buy the forever insurance if you need something that's going to last a long time. But here's the way this works. So the cheap insurance is called term. It has an end date. Now you have the possibility of potentially extending that term insurance. There's a renewable part of that term typically on term policies, but it's super expensive to roll it over past the date that you originally committed to, because the insurance company says, well, you bought the cheaper one, you got the good deal, and now you want it for way longer. Well, we're going to make you pay on that. So people generally buy this term insurance with a very clear idea that they only need it for a certain amount of time. So for example, a mortgage, right? So we have a 20-year mortgage. People want coverage in place for 20 years. So they'll buy a term 20 piece of insurance. And then after 20 years, they look at that renewal cost, they think, holy smokes, like I'm not going to renew this. My debt's done. I'll be fine without this. And then it collapses. So you've paid into these premiums for all these years. You don't get anything back. There's no money back to you because you didn't make a claim. It is what it is. It's a short term or a finite term, and it's meant to be a little bit more cost effective for people who are tight on money, because we shouldn't discriminate, based on income, family income. People deserve to be able to transfer their risk to the insurance companies. They need something to put in place. So term insurance is great for that. Then we have the forever insurance, which is called permanent insurance. And it can be, several multiples in cost compared to the term insurance. Like you'll see sometimes 5 times the cost on these policies because they are going to eventually pay out. As long as you keep up your payments, these policies will pay out money. And that's why they cost a lot up front. You can buy different types. Some have level payments for your whole life. Some have increasing payments over your term, depending on the type of permanent insurance you buy. But they do pay out, and the insurance company is aware of that. They eventually have to have this money available. So those are the 2 types of insurance that people purchase. In the permanent side, there's 4 common types of permanent insurance. And I don't think anybody wants to listen to me rattle off what these are, but your insurance advisor will cover this with you when they're trying to determine what should you buy, the kind that's cheaper that eventually runs out and you get no money back out of it, or the kind that you could potentially get a little bit of pool of money building up that you can borrow from, and it's also going to pay up down the road. Now, some people say, well, I like the permanent. I want it in place forever. I know I'll eventually want money for my kids because I plan to spend all my retirement money, but I still want money for my kids. Or we have a family cabin. We don't want fights. We'll put insurance in place so money's there for the taxes, for everything to be covered so the family cabin can stay in the family. They'll put these particular these permanent policies in place, but they don't want to pay until they're like 100 years old. So to Evan's point before, you can buy the kind of insurance where you pay it up in 10 or 15 or 20 years. So you pay quite a bit more up front, but then the payments stop. So while you're earning income, you've got a good paycheck, extra money at the end of every month, pay down more into this thing, and then down the road you don't have to worry about keeping up these payments as potentially your income drifts off or something, a surprise thing happens and you don't actually have the money anymore. So the paid up insurance is really, really common for life insurance policies and putting those in place. So as far as I'm aware, you're only doing that for life insurance policies. Disability disability stops when you stop working. So there's no pay forever on these types of plans. And critical illness, I'm only aware of terms going up to age 75. I'm not aware of any paid up critical illness.
Well,
although there could be.
I guess what I mean by that, Kim, is like for critical illness, for example, at 75, you would get, if you didn't use it, you would get the return of premiums, right? So I guess my question is for critical illness, is there like a ceiling where you've paid it up? Like, let's say you buy it when you're 50 and you pay it by the time you're 60. Like, is there, I seem to recall there being some kind of insurance product where you didn't have to necessarily just keep paying all the time. You could actually pay all of the premiums.
Yeah, there could be. I don't know off the top of my head. I can't think of one, but sure there is. I mean, insurance companies get pretty creative on trying to sell their products. So
yeah,
there could be a paid up critical illness, maybe. I don't know.
Yeah, I think it's important to note, you kind of said it without saying it directly, and anybody who's buying insurance from an insurance broker will be told this, but even if you buy permanent insurance, if you stop paying your premiums, then the insurance will eventually lapse. Sometimes sooner, sometimes later, depending on what kind of policy and if there's cash value. And then you don't have the insurance anymore. Mm-hmm. So sometimes I think people may think that, I bought permanent insurance, I've always got it. And unless it's fully paid up, like you were saying, Kim, if you don't pay your premiums, then you don't have insurance anymore.
Yeah.
And what are the consequences if somebody let's say they bought this permanent insurance starting when they were younger, like 30 or so, and then now they're 65, and if their insurance policy lapses, is that a bad thing?
Yeah, well, I mean, it's just heartbreaking. You know how when you're younger and you just think about dating someone and you're like, do I want to get into this kind of commitment? This could be a long commitment. Do I like commitment? And I was always one scared of commitment. I'd run away from everybody. So I get nervous sometimes just because of my personality that people put these big time commitments in place, and sometimes they'll do it on their kids' lives and want their kids to take over these policies down the road, and the kids are like, I don't want this, it's too expensive, or it's stupid, I don't have any need for it. But they put these policies in place and they pay in so much money that you get in so deep that you almost need to keep paying them up. And sometimes people feel resentment towards their family members who put it in place for them, because they're 48 years old and they've been paying into this thing. They don't know why. They're finally starting to think about it, and they're like, I don't even need this. And $150 a month out of my checkings account goes towards this insurance I don't even want. And yeah, you get in so far that you have to keep it going. Now, you would consult your insurance advisor at that point. You wouldn't just let it lapse without talking to somebody, because to Evan's point, many of these permanent policies have cash that builds up on the side. Not all of them, but many of them do. So if you don't want to pay anymore, many of these policies will start to use that little cash bucket to keep paying that insurance and keep it in place for longer. But not all of them have that option. So yeah, when you're buying permanent insurance, make very darn sure you know why you're buying this and that there will be a need for it down the road. Because if you don't buy the paid up for 20 years, then you're going to pay this thing until you're 100 years old. Most of these stop payments at 100. You get that bonus offer if you can make it to 100.
And a letter from the Queen, right?
But that's not easy to get. I had to apply for my grandma, and actually my sister applied for my grandma. It took forever to get the letter from the Queen. That is not an easy thing to do.
I wonder if she sent one to her mom when her mom passed 100.
No, Evan, I don't know.
Oh, that's interesting.
Hey, I've got two philosophical questions, which again, I'll give Heather a chance to jump in before I ask them.
And no, I'm very curious about these philosophical questions.
Okay, philosophical question number one.
Yeah.
For Kim MacDonald.
I'm glad it's not for me, for the record.
I just felt like for a moment, like I was on like those old dating game shows, like Bachelor number one, this question's for you.
If you had to choose one insurance policy,
which would you choose and why? Okay, Kim.
Yes.
I just wanted you to talk a little bit about like the role that insurance, both life and disability and critical illness, the role that plays in our society, and like the policy reasons behind like why we want a robust insurance industry.
I have heard, I don't know what the statistics are on this, but I've heard that Canadians per capita have a significant amount of insurance compared to the other countries in the developed world. So maybe we have a conservative nature to us. Maybe our salespeople have done a great job selling insurance. Maybe the insurance companies have amazing marketing that creates a fear that people need to cover. I'm not quite sure why our insurance industry is so active and so healthy, but people want to protect themselves. They worry about their family members. Maybe it's a caring thing, and people just want to make sure that their family members are okay. Let's say you have a disabled child, they can't take care of themselves. Maybe it's an adult child with severe anxiety and depression. What do you do for your child if you don't have a ton of money? Well, the only way to protect them likely is to put insurance in place and make sure that it's protected or make sure their government benefits are protected from that pool of money. But But people have strong connections to their family members and they want to make sure that they're going to be okay. So if we have a scenario where somebody maybe doesn't have a lot of savings for their retirement and they want to make sure that their kids get something because they didn't. When their parents passed away, they got nothing. Maybe they want to put insurance in place so their kids don't have the same experience that they did. And I think there's a lot of emotion that gets built into this. I know I feel strong emotions about people having coverage because being in this industry, we hear the sad stories. We hear more of those sad stories, like little kid gets eye cancer, has to fly to Toronto, parents have to take time off work, one has disability, one doesn't, there's another kid. How do we juggle all this? Where do we get the money to be flying back and forth? So I think it really pulls at the heartstrings, and when people say, you know, am I going to be okay? And we look at their financials, we think, geez, you're not going to be okay. Your family members are not going to be okay if something happens to you. So why don't we put something in place to protect? And maybe we don't have to put everything in place, but let's put something, right? Like many people are caught up on the idea that we have to cover the entire liability. You know what? It's better to cover some of it than none of it. So why don't we put a little bit in place? Maybe it will help them for a few years, just enough time to get them back on their feet. But I think it is a very emotional thing, and we care about our family members. We love them, or we care about our friends deeply. Like the LGBTQ community has had issues with their family members. They want their friends, their friends or their family, they want them to be better off when they pass away. Like everybody's coming at this from different angles. How do we protect our loved ones and give people a leg up if we can? That's why they buy insurance.
That brings up, sorry, Evan, did you want to ask your second
Heather,
philosophical question? Okay, this is a practical question, but we can go back to philosophy in a second. I guess we've been sort of talking or assuming in like a family context where spouses are leaving the money or the beneficiaries to one another, but can anybody insure their own lives or someone else's lives? Can you put anybody as a beneficiary on your life insurance policy?
Yes. So this kind of feeds into the separation divorce world in a way. So in the insurance world, they've created two types of beneficiaries. There's a regular beneficiary, and you can change this person. If somebody doesn't treat you right, you can take them off your policy and put your favorite kid on and take the other kids off. Whatever, it can be changed and altered. Then there's an irrevocable beneficiary.
Sorry, can that be like a friend too, or your neighbor down the road, or whoever? Okay.
Charity, friend, whoever. Yeah, you put whoever you like on there as your beneficiary. Okay. And there's also the irrevocable. So this is the unchanging. So we're putting this in place, and you can't change this. You can't change your mind down the road. We are putting this in place unless that person passes away. You're not changing who that is, unless I'm guessing there's probably some court cases where it's been overturned, but I don't know of any myself. So lots of insurance products have this irrevocable beneficiary. So in the investment world, we have segregated funds. You can have irrevocable beneficiaries on those. You can have irrevocable beneficiaries on life insurance. And you'll often see that in separation agreements where people say, well, my spouse has a commitment to pay me a certain amount of money over a certain number of years. If they pass away, we want to make sure that there's coverage in place so they can make me whole on those payments. So what you don't want is that beneficiary changing over time. We have had some cases where people are not insurable, unfortunately. So they'll put their spouse's name on their RSPs because it's the only money that they have. But those, unfortunately, aren't irrevocable. You can change those, and there is a significant amount of risk to that scenario. So life insurance can present a really tidy way of covering those spousal and child support payments by indicating an irrevocable beneficiary on a policy that covers a specific term, and then everything's good. But yeah, we have different, sometimes parents will take out permanent insurance policies and they get sick of paying into them over time. They can put a new owner on that policy. So it's on their life. Nothing's changed in that way. They are the insured still, but you can change the owner and beneficiary of that policy potentially to keep it going. So many doctors will buy permanent insurance policies, and sometimes they'll have their kids take them over. And the kids will, rather than add to their RSPs, they'll just wait for mom and dad to die and get a big windfall from the parents paying into these permanent policies for years. So lots can be changed.
The owner is the person who is responsible to pay the premiums.
Yeah. Correct. Yeah.
Okay.
And a question that you didn't ask, Heather, but that maybe because you didn't know to ask it is,
Yes.
one of the questions that's asked if it's litigated, for example, is there an insurable benefit here, which can relate to, like, can you just own a life insurance policy on just
J-Lo or something? Oh, sorry.
I'm gonna buy this life insurance policy on, like, let's say it's the early 70s, and you're like, Elvis is not looking great.
Right. Yeah.
I think his time's coming up. I'm gonna buy a life insurance policy on Elvis.
Yeah.
Kim?
Can't do it, Evan. You're absolutely right. You're right. There's got to be a legitimate reason for putting this insurance in place. You can't just pie in the sky, pick a person and put a policy in place on them.
Heather's really been living risky lately. I'm going to get an insurance policy on her. That seems a good bet.
Put it in place quickly because the air conditioning's still not working up here. I may expire that
I can see your forehead's getting shinier. Mine's
like it's really warm up here. I was going to ask about irrevocable beneficiaries. I had thought, and maybe it depends on the policy, that with the consent of that beneficiary, you could change that. So potentially in the spousal situation, if you're all paid up on your spousal support and you're and my husband agreed to, or my ex-husband, then he might let me change the beneficiaries to the gas station attendant or whoever it is I want to change it
Heather.
to. Is that correct, or is it set in stone forever?
No, I'm pretty sure. I'm pretty sure you're correct. I've never done that paperwork before, but I'm pretty sure you just need their consent.
Okay.
Yeah.
Okay. Thanks.
Right. Okay.
Philosophical volley back to you, Evan.
Yeah, I got it. Okay. This is going to come out as like 4 questions, but it's kind of one question. So I'll just ask the whole thing. How does insurance fit into a financial plan? Why do we need insurance? What function does it serve? Okay, it was only 3, but yeah, that's what I'm interested to know. Like, okay, I know insurance is an important part of a balanced breakfast, of a balanced in financial plan, but why? What's that function?
Yeah. I'll give you the process that a financial planner would typically go through, and I think it might answer your questions. So when somebody's looking to figure out where they're at with their money and where they're going with their money and what it looks like when they want the option to retire, or what it looks like when they choose their date of death, what we'll do is we'll gather a whole pile of information. So one of the first things we ask for are their pension estimates, and we ask for their group benefits booklets. So group benefits booklets are going to give us life insurance, disability insurance, critical illness, and travel insurance. These are all very important. Travel is very, very important, especially when people are retired. You have a layover in the United States and you don't have travel coverage and you get sick, well, see you later, retirement, right? Like, these things are crucial to have in place. Many people rely on their credit cards for their travel insurance, but if you look at the fine print, there's an age that you reach and these things are no longer covering you for what you thought they were. So making sure you have the proper travel insurance is important. So we ask for that group benefits booklet. It tells us a lot of good stuff. Then we look at their pension information and we start to figure out what they have for money. Then we get their bank statements. We see what they have for money in their savings as an emergency fund, and we look to see what they have for investment. So we start to build a story. So we have what their retirement money potentially is going to look like, because we'll be able to look at what they get for government benefits like CPP and old age security. Security. We'll have their pension estimates if they work to when they tell us that they're going to work. We have start to get their insurance pieces together, what they have for life insurance through their work, or how long do they plan to spend at their work? What happens if they leave their work? What do they have for disability? Any critical illness? Maybe we need to just explain to them what critical illness is. They've never had it before. So we go through those items, and now we've got their investments, and we can see how long we can project their investments to grow based on their retirement. And we go through a full risk analysis. How much risk can they handle? How much is their money likely to grow based on their risk tolerance? So we start assembling all these little pieces. And when you tie it all together, it's pretty easy to see where people's liabilities are. So if you don't have disability coverage, well, we're going to bring that up to people and say, if you can't work anymore and you can never ever make any more money, what are you going to do? And people will explain to us, well, I've never thought about that, or my spouse makes enough money, I'm fine. Okay, great. We've had the conversation. Now you know your liability. You're not blind. You can't just pretend you don't know this information. Okay, next up, do you have a family member who was in a pickle because they got sick? Do you have a friend who is on a GoFundMe page? Is that something that's okay with you? Or do you want to make sure you cover that liability? Maybe it's just a couple bucks. Maybe it's, $20,000 you put in place, but at least you put something in place. Is that important to you? For some people, they say, I won't get sick. I don't want to pay into it. I don't have any extra money. Well, at least you brought it up to them and they've declined. So now they're not blind to this particular type of insurance. Something might cue them a couple of years from now. Somebody might get sick and they'll say, you know what? I remember that insurance. I think I need to go buy it. Or I remember that insurance. I don't have enough money, but grandma and grandpa are offering to pay for something for me. Maybe I'll ask them to chip in for this type of insurance. So that's important. And then when we look at their life insurance and they say, well, I hate my job. I'm not going to stick around at my job. And we're like, well, what are you going to do for life insurance when you leave your job? Is it important to you to have money for your family if you pass away? And some people say, no, my family will be fine without me. They'll sell the family cabin. Okay, great. Well, we've discussed it. The family now knows the plan. If you get sick, sell the family cabin. There's enough money there potentially for that scenario. Or, no, there isn't enough money. So let's talk about how much we need to put in place. So you'll look at income. Are we replacing the breadwinner's income? So if that's the case, then we have special tools to crunch those numbers. So if you make $70,000 a year and you die at 38 years old, but you are planning to work until age 65, well, we need to cover that gap between age 38 and 65. We need to have enough money for your spouse. Now, maybe we trim that back because you're no longer in the picture eating the food, spending the money, but maybe we need to consider that we have money in place for your kids' education. Is that important to you as a family to make sure that their post-secondary is paid for? Do you want to chip into your kids' weddings down the road? Your wife might have a difficult time, or your husband might have a difficult time saving up for these things on their own. Do we put money aside for those? How much money do we put aside to cover your income? So we project that out and say, okay, the value of your income going out that far in today's money is X, Y, and Z. So this is a baseline for your life insurance. And then sometimes we'll have money for nannies. So a spouse may say, well, I will go back to work, but I'm going to need childcare. So what kind of nanny do you want? A live-in nanny? Do you need childcare? Are the grandparents going to take care of the kids for part of the time? What happens if something happens to the grandparents? What's plan B? So we talk about all these needs and what's important to the family to cover, because we're just here to sniff that out. We're not here to push insurance on anybody. We're just here to present their liabilities, and people will choose off the menu what they want to cover. And then we come up with quotes based on what it is that they're looking to cover. And people will say, oh, I'd really love to cover this one thing, but I just don't have the extra money for that. So now I know that this is a gap for me and I'll have to deal with it in a different way. Or at least I know it might be an issue down the road. And you just, you keep it in your back pocket until maybe you make more money, you can apply for more insurance, that kind of thing. So there's a proper needs analysis that's done by all insurance advisors, just making sure that they put enough in place to help out that family and educate people on what their liabilities are. So right. Is that helpful, Evan?
That was a very comprehensive answer, Kim. Yeah, it is helpful to get like a glimpse in into what kind of analysis that you would do to help people decide how much insurance they need.
And how important is it, right? Like making sure that people's families are okay. What if you were an insurance advisor and you didn't spend the time to figure things out, and your spouse passed away and there wasn't enough money? How horrible. How horrible. As a professional, you didn't do your job. You were meant to educate people and fill them in on what could be done. Now, some people say, well, I have serious illness. I can't qualify for the insurance. I tried before and I got declined. So in that scenario, there are insurance policies called simplified life insurance. So you can get insurance that doesn't go through the typical medical underwriting. You usually get less and you have to pay more, but insurance can be put in place. So maybe where you wanted $100,000 of life insurance, now you can only get $50,000, but for the same amount as that $100,000 you wanted, you only get $50,000. But at least something's in place. And it is just the luck of the draw. If you have poor health, I mean, the insurance companies, they're going to judge you on that. So it kind of goes back to get your insurance when you're young. If you have good health when you're young, just put something in place, because it's going to be really cheap to get it there, and you won't have to be so stuck down the road. So, yeah.
So someone could come to you, Kim, and they're not obligated then. Like, you can do the whole meal deal quote, have the chats with them, and they can look at that then and pick and choose which products give them the most comfort, what they can afford in their budget. And I think you said that like most of them depend on the amount you're getting insured for too. So you could maybe do a little bit of each or the full amount of all of them or whatever, depending on what you want.
Exactly. People, they have the full control of this situation. And it is pretty important to be, with your spouse in the meeting, having these conversations. Because think of it this way, like you are putting insurance in place on your own life. So I pass away and I put a certain amount of money in place thinking that my spouse is going to want to live a certain way. What if my spouse doesn't agree with that? What if they wanted more money? Or what if they wanted less money because their lifestyle would change? Like, it really is important to not only talk to your spouse about what you want for them, but also what they want for themselves.
Right.
Because sometimes that doesn't necessarily line up.
Right.
And it is, it's part of the needs analysis. What are we actually trying to cover here?
Yeah.
Wow, this has been like a comprehensive introduction to the world of insurance. Yeah, like I wanted to use the word masterclass, but obviously it wasn't a masterclass, but it was like a masterclass introduction.
Yeah.
I wanted, sorry, Kim, go ahead.
I was going to say, I think insurance is boring to read about, but it actually is pretty interesting conversationally. So I think this podcast will probably be a lot more interesting for people than to like go on the internet and start reading up on insurance.
Yeah, it might not be for everybody. Like, I get it. It's not like the sexiest topic necessarily. Like, being really prepared is not the sexiest thing to talk about. But one thing that I was thinking about as we were talking about it, and obviously I had my philosophical questions because I was thinking about. I've been reflecting lately just on our society, the kind of economic protections that we have in our society, and how our wealth as a society is so high compared to history, any time in history that you want to choose. It's pretty remarkable, and we definitely take it for granted. And I think a key part of that is definitely a healthy insurance industry, because it's that's what allows big payouts to people that need it. And which takes the strain off of other resources in the community, versus if there was no healthy insurance industry and the government would take care of it, and maybe would they? I don't know. It's so it's an important part of like the mosaic that makes up our societal safety net, I think. Anyways. My closing thought is I just wanted to update our listeners on our previous Kim MacDonald episode, I think it was your episode, Kim, where we were talking about, it might not have been your episode, but I think it was, where we were talking about, how the, I can't even remember now, the certified financial divorce specialist, right?
Oh, I got it wrong when I was rattling it off in that podcast. It's certified financial divorce analyst and chartered financial divorce specialist. No, chartered financial divorce specialist and certified divorce financial analyst. I was going back and reading that transcript and I was like, I got the designation completely wrong. I said it completely wrong. I don't know what it is.
This is an important retraction that we had to issue then. Okay, so one of those, because now I'm not even going to bother trying to restate them.
Don't ask, because I don't even know. I have the credential, but I don't know what it's called.
But one of the things that you can do there is help people preparing their financial disclosure, getting into a useful format for the lawyers and everybody to kind of see, right?
Yeah. I think lawyers would just be so pleased if people just showed up with a tidy, chart of their expected expenses down the road, a tidy little organized assets, correct, like it's correct, and what they have for insurance, and how everything, how their income versus their expenses looks. Just having a nice, tidy, accurate little picture probably would just make a whole pile of lawyers' lives so much easier.
So we're putting it to the test here, because the update I wanted to provide was I just referred somebody to Kim, one of my clients to Kim, and we'll see if the client ends up doing it. I encourage them to do it, because otherwise I'm going to have to do it. And I was like staring down the barrel of doing this. I'm like, yeah, I can do it. It's going to cost some money. I'm like, oh wait, Kim can do it. So
yes, she can.
Yeah,
we'll see. I hope. I just wanted to give an interim update. Hopefully, we get a final update of like, yeah, we did it. And it was awesome. So
awesome. Yeah, my goal is to take on one of these a month and see how that fits in with my typical business that I run, and then over time, maybe just add more as we go. But yeah, I think it's fascinating, right? Helping people organize their investments, their insurance. I know the answers. It's easy for me to do it. I've got software to lay it out. Hand it over to the lawyer. The lawyers are going to be pleased.
Yeah.
And
fascinating is not the right word. It may be fascinating to you, but that's what's so great about it. It's not fascinating to most people.
That's right. Yeah.
So I just wanted to give that update, and hopefully we'll have more to follow on that. Heather, closing thoughts?
Thank you, Kim, as always, to share your wonderful fountain of knowledge with us. This is definitely one of those topics that I find very difficult to stay engaged with when reading, but it's been a lovely conversation, as you said, to chat about this stuff and learn more about it.
awesome.
Kim, any closing thoughts? Anything we didn't cover that you wanted to?
There's a few things I have down, but I think we could do another insurance podcast on group benefits, maybe a little bit more in terms of what happens in divorce when one spouse is on the plan, what next, what can they do next to get health and dental in place, all that kind of stuff. And then maybe we could do a more high level insurance podcast for business owners. I don't know. I'll leave that up to you guys to choose, but there's definitely more to talk about. So let's put a pin in it and bring it back one day.
Yeah, Heather, can I just make a request that we do one where we talk about the strategy of using insurance to secure child support and or spousal support payments?
Sure.
Because that could be something that people don't really think about as an option necessarily most of the time. That could be. Maybe not, but maybe.
I'm writing it down.
Excellent. Okay, well, on that note, this has been another episode of Access to Justice. Thanks for listening and or watching. And if you have any questions you'd like us to address on the podcast, send an email to accesstojusticepodcast@gmail.com. That's access, the number 2, justicepodcast@gmail.com. And we'll do our best to get you an answer on an upcoming episode. I was going to ask, hey, Kim, have we gotten any emails? But then I realized we actually haven't published any episodes yet.
Right.
So no, nobody is sending us questions.
Yet.
But,
although when they're watching this will be published, so maybe
Yes.
they will have. Oh, someone send a Slurpee.
All right, thanks for watching, everybody. We'll see you next time.
Any information in this video is general information only and is not, nor is it intended to be, legal advice. Watching this video does not create a lawyer-client relationship. You should always seek the advice of a lawyer or other qualified professional for advice regarding your individual situation. While we take care to ensure that the information contained in this video is accurate and up to date, we make no warranties or representations as to the suitability, completeness, or accuracy of the information contained in this video. Any reliance you place on the information is at your own risk. Kahane Law Office, Merrick Law, Heather Malarick Professional Corporation, Evan Clark Professional Corporation, Evan Clark, Heather Malarick, and any guests will not be responsible nor liable in any way for any content, including but not limited to any errors or omissions in the content, or for any loss or damage of any kind occurred as a result of any content communicated in this video, whether by Evan Clark, Heather Malarick, or by a third party. Kim MacDonald is a financial advisor with Raymond James Limited. Information provided is not a solicitation, and although obtained from sources considered reliable, is not guaranteed. The view and opinions contained in this media are those of Kim MacDonald, not Raymond James Limited. Securities-related products and services are offered through Raymond James Limited, member Canadian Investor Protection Fund. Insurance products and services are offered through Raymond James Financial Planning Limited, which is not a member Canadian Investor Protection Fund. Raymond James advisors are not tax advisors, and we recommend that clients seek independent advice from a professional advisor on tax-related matters. Insurance products and services are offered through Raymond James Financial Planning Limited, RJFP, a subsidiary of Raymond James Limited, which is not a member Canadian Investor Protection Fund. When providing life insurance products, financial advisors are acting as insurance representatives of RJFP.
Darkness of the dales dissipates, declines, because of he who turned water into wine.